El Paso was the nation's standout apartment market back in 2010, putting up astoundingly big revenue growth numbers while most everywhere else was just starting to regain some momentum. But what has happened since then? We'll take a look. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your El Paso update. Back in 2010, no market was hotter than El Paso. El Paso is benefiting from rapid expansion at Fort Bliss, plus some issues on the other side of the border that was driving people into El Paso. Occupancy got as high as 97.7%, and annual rent growth levels peaked at 10.7%. Some very impressive numbers. But then we started to build more apartments, lots of new apartments, and apartment fundamentals have really cooled off. You can see on this chart that annual new supply levels hit a two-decade high in Q3 of 2012, about 1,200 units completing in the past year. Prior to this cycle, El Paso hadn't added more than 700 units annually in any period dating back to 1997. And at the same time, the job market has been very healthy, and we'll look at that more in a minute, but apartment fundamentals just aren't as attractive as they were back in 2010. Let's start with occupancy. Overall, still a solid rate, 94.6%. That's a long way from the peak of 97.7. Occupancy has fallen in 8 of the past 10 quarters, and new supply is certainly playing a role in that. As of Q3 2012, occupancy was down 70 basis points in the quarter and 130 basis points year over year. And let's take a look at rents, and we've really leveled off on growth. Same-store rental rates up just 2.7% year over year as of Q3. We've seen numbers right around that range in each of the past 5 quarters, far below that peak of 10.7% 3 years ago. But it's worth pointing out that El Paso is one of the very few markets not to have cut rents during the recession. So when we look at rent change over the past 5 years, we see El Paso is actually the best in the country. Same-store rents are up 22%. So while the 2010 growth numbers may be a blip, the market appears to be priced fundamentally different, higher than it was prior to the recession. Of course, in the broader national picture, El Paso is still an affordable market in the nation's bottom quartile with average monthly rents of just $731. But as I mentioned earlier, the job numbers in El Paso still look good. As of Q3, the market added 7,000 jobs annually, expanding the employment pool 2.5%. And since the start of 2008, El Paso ranks 9th nationally with a proportional job growth rate of 1.9%. So what does all this mean for the year ahead? Well, new apartment supply levels are going to be dropping off again, and the economy should still be growing, so apartment occupancy should climb back up, and rent growth levels may pick up a little bit again, but we shouldn't see anything close to those 2010 numbers, of course. And that wraps up for El Paso, so until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.